Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily. Today is March 11th, 2025. In today's video, I'm going to be giving you a window to my thought process on what potentially could play out with the SPY and the stock market. I'm noticing some bearish things that have played out multiple times. And when you identify trends, you bet with the probabilities going forward. So, this is not financial advice. This is for educational purposes only. I have been doing technical analysis for 17 years, and I'm trying to regurgitate all the information that I am obtaining in the chart that I'm seeing and trying to educate you so that you could identify these trends as well in your future endeavors. So, this is the monthly chart. The first thing I notice is MACD is about to death cross. RSI already broke down. So what are we looking at, and what should you have noticed in order to catch this red candle? Well, number one, if I see a top forming and I see volume coming down, strike number one. Strike number one is the RSI, because the RSI is always the first mover, right? When you are underneath the moving average, you're bearish. When you're above the moving average, you're bullish. When you're in section A or A plus, you're bullish. When you're in section B or B minus, you're bearish. So we were oversold, overbought, right? Double top, break of market structure right here. This is the most important thing. When you break the line of going from one section to another section, you instantly have room to bleed. If we break one section and go into another section, we have room to bleed. If we're breaking up, we have room to grow. If we're breaking up, we have room to grow in order to be oversold, overbought. And then you look to see where there are ranges, right? So, right here, right, the month of December, January, and February were crucial. Okay, we were making higher highs each time. This was our first lower high. This was an inverse head and shoulders. This was a break of the 70 line. This was a break of the moving average. The next month coming in, room to bleed. So I want you to identify this and this and this inverse head and shoulders and a break of this, right? Break, right? A breakdown, right? Lower high, break right here, right? Break right here, break right here, break right here. And then I want you to double click the chart and see every circle and see what was the price action thereafter. And it was never a good thing. Never a good thing. Sometimes we went to the 45-50 range and we had small 15, 20, 30% corrections. Sometimes we broke the 50 line and went to the 30 and below and we had big corrections. Big corrections equaling 50% back to the 50 line. Let's just say is like 20, anywhere from 15 to 30%, right? So what I do is I say, okay, we've broken down. We have room to bleed. Room to bleed where? What are the averages? What are the time frames of these consolidations here? Okay, the line has not turned purple yet. Your monthly is still in section A. This could potentially be a pullback. You can see the divergence number. Also, printing, which is never a good sign. Every time these numbers print, it usually shows market bottom, market top. I'm curious what the Heiken is. That's also never a good thing, since we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 months of bullish momentum. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, let's just say 20. What is this one? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. let's just say 20 something. So you can see here, you go from extreme oversold, you print massive monthly candles until you're extremely overbought. You get your bearish divergence, MACD death crosses, and then you have a nice consolidation. The most important thing is, are we going to form the same low or continuously make a higher low, right? As of right now, if it's hard to draw trend lines, continue going longer. Sometimes less candles is easier. So there's trend number one. Okay. I'm curious if I add the 3-month. Okay. So you could see how it didn't line up here. This was a wick, this was a candle. On the 3-month, candles line up, wicks go below. So what this shows me is there's two levels. There are definitely two levels. This is our current trend that we have been in since 2009. Okay, we double topped, we came down, we double bottom, right? So double top, double bottom, sideways channel, monthly broke 50 line here, 50 line here, was off to the races. Stayed above the 50 and the 70 all the way since 2012. That's really your confirmation that you're in officially a bull market. So since 2012, broke the highs of 140, and we have been on an absolute rip of 5,388 days, 454%. So first thing, like I said, the most important thing is this going to break market structure, which is the yellow and the white line. Now I would like to see the dips, the amounts. So let's just see from here to here, 91 days until the bottom, but it took a while to obviously recuperate. But let's just say 60 to 90 days, 15%. All right, this is 100, 180 to 200 days, 18% to 20%. 200, so let's just say 200 days, 15%, 13% to 18%. $93 days, 60 days, 20%, 60 days, 20 to 30%, 150 to 250 days, 25 to 30%. 60 days is May. I've been saying April, May the whole time. And then the summer comes. 20% would be back and retesting the 477. And I like it to the 22%, which it retests the 457. The same way that this came down and retested here, I would like this to come down and retest here. I like it. Nothing changes until you break full market structure. So bullishness. Yes, we're having a death cross. Yes, we've broken down from section A plus to A. Bullish. We're still above the 0 line. We're still above the 50 line. You can see here breaks of the 50 line, and we go where? To the yellow. So obviously I would not put all of my eggs in the basket here. at 477. I would keep some shekels on the side for the 450, maybe the 455 level, you know, something around here. And we're looking at March, April, May, June, you know, like those 2, 3, 4 months, just to give you a visual if it's fast. I'm looking for it. Something like that. We go to the 455, 448, and then we start forming that bottom. That's the bullish scenario. Bearish scenario is we break. We break this low here of 411.59. We break the zero line because right now your most recent low is that, right? We went from here to here and from here to here. So your most recent low is this, your 410. That represents your most recent zero line. So you can see here we could come down, not break the most recent low. Like I said, go to the 445 to 455. Still be a beautiful correction and another buying opportunity. Now I would set some alerts, obviously, right? Because if this does break the zero line, and if this starts really falling into section B and breaking major support of this level here, right? You could see we've dipped to the 40, let's just say the 45 to the 48 level. We've dipped to the 47 level. We've dipped to the 42 level. We've dipped to the 43 to the 47 level. So this is a key level right here as well, where if we do fall below, do we fall into that safety net and then bounce back up? Now another thing I'm noticing is that, okay, do we fall and then do something like this? Because this is hidden bearish, okay? The waves for the past 3 waves, we went from 286 to 482 to 612, and this went, the RSI went from 86 to 78 to 74. That shows potentially bearish reversal on the horizon. So once again, will there be buying pressure here? Yes. Do we come up and do something like this? I don't know. Do we do something like this? I don't know. Do we do something like this? I don't know. As of right now, more bearish signs are point longer, right? I mean, you're talking about months of me showing you where the bottom potentially could be without it even retesting anything, right? This is how I'm able to just analyze a chart and use previous price action. If we fall through this level here of, let's just say 450 to 413, and we do something like this, then we do something like this and retest this 450 but below the white and yellow line, and then we do something like this back to this level here. But the most important thing is, if you look long term, that would be the first time that we break market structure. That would form a huge inverse head and shoulders. This would be your neckline. We would be falling down to 200 and potentially over here. But that's very rare for that to happen. Like you could see this maybe. This was a nice healthy 36%. Right? You come down, we hit these levels, but then there's so much opportunity that it just brings us back into the white line. That would be bullish as well. Okay, so let's go over the scenarios from most bullish to bearish, and then I'll end the video. Bullish, we go from here, we stop at the yellow, and we stop at 480, the top of this candle here. Next bullish, we come down and we go to the white, and we stop here at 450. Next bullish, we come down, we stop at the white, but you have a wick to the 420 level. Next bullish, you come down, you break these levels, you come to this level, you have a wick for the month, but then the wick brings us back up to the 420 to the 460 level, and then you trickle in between the white and the yellow, and then eventually break up. Bearish scenario, we break, we go up, we get rejected, and then we break down. Bearish scenario, we break, we fall through, we find support at 412, go back up, then retest, then come down. Worst case scenario, we fall straight through, go all the way to the 345, have a dead cat bounce to the 410, get rejected, form the inverse head and shoulders, see rejection below here, as well as forming a lower high. And then you're off to the races back down to the 280 to potentially the 242 level. Is that possible? I mean, this was 2008. There's a lot of speculation within the commercial real estate industry. And the last time this happened was because the mortgages screwed the banks. And a nice, that'd be 40%. But let's just say 30-something% from the top would still take us back here. That'd be worst case scenario, because once again, now you're breaking market structure, right? One of the rules is I buy at support to take profit at resistance. If you break support, not buying. So that's the video. It doesn't look great. It doesn't. You could, I mean, very simply put, right, I have a strategy where if the RSI is above the 50, we're taking profit when the divergence numbers are popping above, popping above, popping above, right? This is telling you you're getting your sell order and you're breaking. The best case scenario is a retest of the moving average, but rejection, since now you're in section B and your daily is extremely oversold. You're going to see a dead cat bounce every time we've been below the 30. You're going to see a dead cat bounce. The most important thing is, does it come back up and see rejection by the 50, which means it comes back up and sees rejection by your 578 to 583 level, which would line up with the bottom of these candles here and your purple moving average. When your moving average is purple, you have a very high probability of seeing rejection unless you break above, and then you have bullish momentum, and then you're off to the races. But the first level is always the moving average. That is the video. As of right now, I am not doing anything. I am waiting. Long-term trends predict short-term outcomes. If you're doing anything and your long-term trend is bearish, you should switch your mentality to shorts. If the long-term trend is bullish, then I am thinking more longs, right? I'm waiting for a pullback to the moving average, divergence, bullish divergence, taking profit here. Waiting for the pullback, divergence, taking adding to the position here. As of right now, because you're bearish, you could see you could have divergence and go back to the moving average and see rejection and form a lower low, and then another lower high, until once again right here we broke above. Weekly broke above moving average and stayed above the 50. First wave, right there. We went from 375, 381, 409, 491. Right now you're in section B. So we're waiting for the first low to happen, then the first lower high to happen. And if we remain in section B, your next lower low is on the horizon. That's the video. Enjoy. I hope you learned something from it. Once again, monthly, if you want to set some alerts, I would right-click on the MACD, add an alert on your SPY MACD, the MACD crossing the MACD signal, which basically implies the blue line is crossing the yellow line once per bar. Create. I would also set an alert, since you understand the importance of the 50 line, set an alert possibly here at like the 53, right? Because that's around the support here and it was your resistance here. So I'm curious to see if we stop at the 53 and we stop at this level first and yada, yada, yada. Those are the first two alerts that I'm curious about. Besides that, I'll make another video. Enjoy the day. Love you guys.